Let's get into the fun stuff. Rising interest rates, rising interest rates. This is a controversial issue. Are rising interest rates going to crash the market? Well, you guys remember the 70s, don't you? Yeah, buying a home in the 70s, I'm sure you guys, a lot of people in this room could tell me stories. Interest rates went stupid. In fact, we're right now at a 25-year high in interest rates. Is the 40-year trend of lower rates over, and now we're starting a cycle of rising rates? Jay Powell said last week, we're going to hold rates higher for longer. He's the head of the Federal Reserve Bank. And our interest rates going higher. This is controversial. Personally, yes, I think so. I can give you my reasons why I think interest rates are going higher. You know, it's interesting today. I don't know if you caught the Financial Times this morning, but do you guys know that I guess the drought in the Midwest is 1,200 years, hasn't been worse than 1,200 years. Cattle prices have exploded. Farms are turning into dust bowls. And cattle ranchers aren't necessarily making more money because they're paying more for feed and whatnot. But the price of beef has gone stupid. The price of everything, the price of commodities has gone stupid. So that doesn't bring down inflation. Okay, so anyway, it's interesting. We all know who this guy is, Sir Winston Churchill, and I love his quote. And I live by his quote. I really am. I teach a class on the history of money, and it's kind of interesting because I really find it follow the money. Remember Nixon? Remember Richard Nixon? Follow the money. Remember that? That's how they got him. Well, it's interesting because if I do look at history, here's what's interesting. In 77, the Fed funds rate was 4.62. It's higher right now. It's in the low fives. But here's what's interesting. By 1980, the Fed funds rate went to 20. That's pretty scary. Those who were buying mortgages remember that, okay? But guess what the market did? Do higher interest rates destroy markets? The data does not support it. In fact, we were just talking about real estate, John. I don't think you're going to get hurt on that home you just bought. In fact, D.B. Horton, the largest home builder, just came out with record profits yesterday. It's like, so I don't, so it's interesting when I hear this on Bloomberg or CNBC, I'm thinking, I don't see higher rates destroying the market. Even when you have historically, I don't know if you can read this in the back, unemployment rates average 6.2%. We're below 4% right now on unemployment. We're below 4%. How do you have a recession when you have full employment? I just don't understand it. And not only that, labor demand is up and job layoffs are down. People aren't laying off. I don't know about you, ladies and gentlemen, but when I go to the store, I have to wait online. I mean, it's popping out there. So, and here's what's interesting. 80% of the companies that have reported, 80% have beat earnings this quarter. So I'm thinking recession. Yes. Is Powell going to... Well, at least he's not lowering rates. I don't think anytime soon, and I think they're going higher. But that's my opinion. And do recessions crash markets? Let's just talk about recession. I asked Vinny Gumbatz over here, my team member. I'm just kidding. He's a good Italian kid. But anyway, I asked Vinny. I said, Vinny, do the analysis. And here's what he came up with. He said that essentially recessions. This is the recessions. Look at the market. Okay, we got a negative 37. Yes, we do. That's scary. But that was really a banking crisis. The banking industry globally was about to blow up in 2008. I mean, literally. And I remember Hank Paulson. Everybody remember Hank Paulson getting on his knees to Nancy Pelosi and saying, please pass this bill? Do you guys remember that? And then Congress didn't pass it. The market dropped 10%. And then the next day, Congress passed it. So I thought that was really interesting. But other than that, the average return of the stock market in a recession is 0. The median return is 5.4. So if you take away this tail event, the average takes into account tail events. Median is the middle. Positive 5.4. So am I going to sit here and say, oh my God, a recession's coming, so let me take all my investments and throw them into a CD? I don't, my attitude is, should we fear a recession? Now I'm sitting here and I'm being bullish. I'll give you another bullish one. This is my Uncle Warren. I wish, right? But I understand he's pretty good with his kids. I understand he only gives his kids $1 million. And he wants them to have you heard that, Susan? Yeah. And I thought that was interesting. Anyway, when there's blood on the market, then that's when I'm a buyer. That's his number one indicator. I've read his book. Read several of his books. His investment principles are easy. One of his favorite indicators is consumer confidence. Okay, that's interesting. So here's what it looks at. This is from JP Morgan. And the top line is when consumer confidence is good. And the bottom line is when consumer confidence is bad. Now, you guys notice something? When consumer confidence is good, markets tend to go down. When consumer confidence is bad, markets tend to go up. It's really funny. I get calls. I get a call from a client who says, Dom, take me the cash. I'm like, okay, thanks. I'm going to buy tomorrow. He goes, why? He says, because you're bearish, I'm going to be bullish. So in other words, just do the opposite, and Warren Buffett says you'll make money. And what's interesting is, if you look at when everybody is bullish, the market doesn't do too good. -6, +2, -2, positive, -4, +4, -2, -1. But when everybody is like the world's coming to an end, +22, +20, +29, +32, and right now we're here. So Warren Buffett would be a buyer. If Warren Buffett, he would be a buyer. He would be a buyer. Okay. However, there's always the however, right? The however. There are some things that we should worry about, right? My attitude is don't worry. If your health is good, don't worry about anything. But anyway, what should we worry about? Let's talk about the government shutdown. This time does scare me a bit, ladies and gentlemen. It was pretty ugly in 2013 when Barack Obama clashed with the Republican Congress. And the dollar took a pretty big hit. Why does it concern me this time? Well, what happened in 2013, which was when they didn't want to pass the budget reconciliation, the dollar took a big hit. And really, this is a question about the U.S. dollar. This whole budget thing is a question about the U.S. dollar. Well, that looks really good. That bread looks like it's homemade. Is that homemade bread? I mean, right in the oven? You guys have pizza ovens and you make it right there? Okay. I actually have a pizza oven in my home. As my clients know, when I have my client appreciation party. It's fun making my own pizza. Okay, so anyway, the interesting thing is that why is this government shutdown concerning me this time? Well, because let's kind of rewind just very quickly. You had Kevin McCarthy, who was pretty much, he was a staunch, he was a staunch Republican. He believed in Republican values. Did work with Biden to pass the budget and extend it to November 15th. But then he got ousted because McCarthy, remember, he went through 15 ballots to become Speaker, but one Republican could say we need to remove him, and then a guy named Gates from Florida said, let's get rid of him. We got this new guy, Johnson, and Johnson is more of a hardliner. He's more of, let's stop. We're not going to continue to spend, and that's the whole thing, is that we're spending too much money. So we're not going to we have leverage. We have to pass this reconciliation, so we're not going to do it. So here's what's interesting. Right now, the U.S. dollar is the best looking horse in the glue factory, because I have a lot of clients that have said to me, well, Dom, I want to be in gold because the dollar's going to zero. And my argument is it's not going to zero because what are the currency? Money's got to flow somewhere. In other words, if money doesn't flow to the dollar, it's got to go out of the dollar to either the yen or the renminbi or the euro or the sterling or the ruble, So what other currency is money going to flow to that's not a big as shit show, excuse my vernacular, than the dollar. So, if all the horses are in the glue factory and we're the best looking horse, money's going to stay in dollars. And that's really my point. Unless aliens come in, it's like, hey, give us your money. Alien money is safer. I don't know. So interesting thing is, let's look at the dollar. Here's the dollar right now. Okay, if we look at the dollar, it's relatively very strong. It's as strong as it's been since the early 2000s. It's been strong. And we can see that right now. The big question is our deficit. Now, ladies and gentlemen, we are sitting at 98% debt to GDP. And all that means in English is, think about your checkbook. For every dollar you make, you're spending 98 cents of it. Okay, our debt to how much GDP is, how much we're bringing in and how much we're spending. And that's concerning, and that's going to go up, and we're drunken sailors. But here's my argument. Japan is sitting at 224% of their debt to GDP. For every dollar they bring in, they're spending $2.24. But the Nikkei is up 22% this year. So I don't know that Japan are living in the streets homeless. So yes, I do agree that deficits do matter. But okay, why am I bringing this all up? Because if in fact, here's the other argument I get is, and I was driving down here today, and what do I hear on the radio? Buy gold, buy gold, buy gold. In fact, a good friend of ours, Richie, Alan, I'm going to use Alan as a story right now. Alan, very smart real estate guy, Telluride. As you guys know, Telluride is obscenely expensive. We should have bought land in Telluride 30 years ago, right? We'd all be billionaires today, but he did. He bought a lot of land in Telluride, and today he's a multimillionaire. And today he lives in a 15,000 square foot mansion in the Mesa. He has properties in Hawaii, he has other properties. Well, Alan is an interesting cat, because Alan is like, what he does with all his money, and I go to visit Alan and Richie, my friend and client Richie, and we sit there, we drink scotch, and we talk about how every chance he gets, he buys gold coins and he buries them around the property. Because he says, Dom, the dollar's going to zero, and I'm going to be the only one that's worth money. I said, in other words, Alan, you're going to go to Safeway, you're going to go to King Super, and you're going to give them your gold coin, and they're going to give you a milk coin. They're not going to give you anything to everybody else. I said, that's not realistic. But he disagrees. But here's what's interesting. In 2013, when the deficit looked really bad, gold dropped with the dollar. So gold was not a hedge. I just wanted to bring this slide up. We had a positive correlation between the dollar going down. Can you see that? Okay. So what does that mean? That means that, just put money in gold and don't buy dollars. So anyway, I think that's interesting. Anyway, here's what could happen. Global economy will lose confidence in the dollar. In other words, here's what happens. We don't sign the reconciliation. So what does the government do? First of all, they close all the parks. You can't go get your passport. Passport office closes. So they start shutting down these agencies that aren't fundamental. The last thing they're going to do is not pay interest on their bonds. But let's assume this thing lasts through Christmas. Let's say this thing goes into January. And the U.S. government says, okay, Janet Yellen, the Treasury Secretary, says, we got to stop paying interest on that 10-year bond. We are no longer the best looking horse in the glue factories. Interest rates are going to go up like they saw in the 1920s in Germany under the Weimar Republic. The U.S. economy is going to go into a tailspin. The standard of living we enjoy now will end. And once you take that genie out of the bottle and say, no, we are the best looking horse, it doesn't work that way. And it's kind of interesting because I read an article in the Financial Times last night. Draghi is head of the ECB, European Central Bank. Remember, Europe is trying to compete with the dollar, so they created this union. And they were saying the union's not going to survive if they don't come together more, because they're always fighting. It's like Texas fighting with New York, fighting with California. But we have this federal government with the European Union. They have these countries that are supposed to be like states, but it's kind of not working. So I'm not sure where money's going to go, but if people think they're not going to be able to, if the U.S. Treasury is not if it's not solid, that becomes a problem. Okay, so yes, this does concern me. This is a concern. This concerns me. This concerns me. And thank you for the book, Susan. I will read that book. This concerns me. It does. China's flexing their muscle. China wants Taiwan. Taiwan is one of the highest technologies. Taiwan is the one that's making the M3 microchip that Apple just announced is going to be manufactured in Taiwan. Right, John? I mean, you want to talk about high technology. And China's like, well, China just took over Hong Kong, turned that into a shit show. So I don't know. You got this going on in Israel, right? Benjamin Netanyahu is basically saying, we ain't no ceasefire. We're going in. We're taking out the Gaza. We're finally going to get rid of Hamas and the Palestinians. Here's the problem. The problem is he's basically bullying up to Iran and saying Iran shows their face and we're going to go to war with Iran. Oh, really? So you know what? If it wasn't for the U.S., Israel wouldn't be able to take out Iran. And we don't want to go to war with Iran. It could turn into World War III. That's not a good thing. Then you got this. I was talking. Who was I talking to yesterday? Over dinner. Anyway, this is terrible. I can't imagine living I can't imagine living here in Denver and tanks going down the street. I don't know. I just don't understand these. I don't understand it. So anyway, this is a great slide, and thank you, Vinny. You can't see it up there. But what Vinny put together for me was how has global crises affected the stock market? And that's what a lot of you guys are concerned about because your life, you're living off your retirement. Let me blow it up in the back. It's kind of interesting talking about like the Iran, Saudi, London bombing, North Korean missiles. Not a lot. Let's kind of go down here. Well, here's some fun ones. Pearl Harbor, market was down 20%, dropped 4% that day. North Korea invades South Korea, started the Korean War. Market was down 12%, dropped 5% in one day. Here's one here, 6-day war. Kennedy assassination, market dropped 2.8%, didn't do a lot. But the bottom line is the average, -5%, -5. Global conflict, -5. What's interesting is, and thanks for this, Vin, this is interesting. Stocks fell, World War I, stocks fell 30% at the outbreak. Market was closed for 6 months. And then when they reopened, the Dow was up more than 88% in 2015. It's interesting. I should include a slide here. I was saying I teach a class called The History of Money. And it's interesting because I have a slide of J.P. Morgan and a quote saying, I love war, I love anarchy. That's how I make my millions. Think about that. Think about the military-industrial complex. Think about, are these wars designed? I recently read a book with Trading with the Enemy, and who was I talking to? But anyway, Trading with the Enemy, great book. Trading with the Enemy says that Hitler came to power because of the American industrialists. Henry Ford, Hitler, in his office, had a full size picture of Henry Ford. Henry Ford was a major supporter of Adolf Hitler. In fact, so was Watson of IBM, Bird. The American industrialists financed Hitler into power. Most people don't know that. There was a series called The Untold History of the United States, and it was bought by Showtime. But the first two shows were about how Hitler came to power, and they didn't buy that. They only bought the last. They didn't buy the 12, they bought the last 10. But anyway, it's kind of interesting. The reason I bring that up is everything a rich man's trick? I'm not trying to be conspiratorial, but are there really any good wars? But anyway, the stock market actually dropped 10%. Hitler invaded Poland, 39. Pearl Harbor, the stock market fell 2.9. But from 39 to 45, the Dow went up 50%. Went up 50%. So interesting data. Those who do not study the past are doomed to repeat it.